Welcome to Shortview Trading. It's around 9 a.m. London time, Monday, 27th of February. So what do you need to think about if you're a trader of equity index futures? If you're a swing trader on that 1 to 2 week time frame, what factors are important? What do you need to focus on? That's what we want to discuss in this video. And that's what we're interested in as we dig into these markets this week. Well, what a week that was in global markets. US markets in particular cracking the upward momentum. Very strong as they were in January into early February, then a bit of sideways in mid-February and then down sharply last week. US S&P 500, for example, off almost 3% on the week. Similar behavior across a bunch of US equity indices, as you can see in the chart in front of you now. Equally over in Europe, weakness as well last week. Not quite as marked, but pretty marked. Some 2% down weeks, although the Swissy defensive market almost flatlined as you'd expect. As I say, it's a defensive market. But interestingly, we're starting to squeeze that exuberance out of markets. And there's been a couple of good indicators of that as we led up to this over the course of the last few weeks. One has been our sell-off indicator, which has generated a signal over the first half of February. That tells you markets are becoming exuberant and tells you to expect some give back in those gains, and that's exactly what we've seen. That signal, of course, closes out at the start of the give back as it did early in mid-February. Secondly, also, you could see those signs of exuberance in many parts of the global markets. Tesla is one typical example of a tech stock that's been quite extraordinary this year, rallying very aggressively and now starting to pull back. And then over and above that, quite a few of the key liquidity indicators have been signaling some challenges over the course of the last few weeks. Look at gold. Look at the price action of gold. Selling off quite sharply at the start of Feb and selling off throughout most of Feb, continuing last week, telling you liquidity's tightening up. Equally, the dollar, which has been rallying in recent weeks and is nicely inversely correlated with gold, similar message, silver as well. So all of these signs telling you that markets are a bit toppy, a bit exuberant, were due to give back some of their gains. And with that, we now see the S&P 500 and the Nasdaq 100 both back at a key support level, back at their 200-day moving average. So the jury's out and the decision has got to be made. How do we play it from here? Now, that's exactly what we think about each and every day in the Daily Rag, also known as the Rag Trader. This is our 1 to 2 week recommendation on S&P equity futures that we update every morning with commentary on the markets. What's driving these markets? What are the macro factors at play? What are the key risk appetite models are saying, both in the short term 1 to 2 week basis and also the medium term 1 to 2 month basis. So if you're interested in a trial of that, please click on the link below. Put in your name and email address. We'll send you the Daily Rag for free for a bunch of trading sessions. See if you're interested and it's helpful and you like it. Or if you're a subscriber, please go to the website, or you should have an email in your inbox this morning with our latest thinking on how to play markets from here. So what are we focused on over the course of this week? Well, there's a bunch of stuff going on that will matter for markets. In the US, there's a theme in terms of we've got the key ISM indices coming out on Wednesday and Friday, manufacturing Wednesday, service sector on Friday. They'll be watched closely. Remember, the January service sector ISM index bounced aggressively. Will it give back some of those gains is the key question. Elsewhere, over in Europe, there's some interesting data, some inflation data later this week, but also M3 money supply and monthly lending later today on Monday. That'll be watched closely as well. Added to that, we've also got some key earnings data out of the States, in particular some US consumer-focused companies, which will be interesting given what we heard from Walmart and Home Depot last week. So that's it from us. That's your morning market hit for Monday, 27th of February. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe. Trade well.